Let's stay on the markets here and bring in Tina Byles Williams, CEO of Xponance, a company that has more than $9.5 billion under management. Tina, good to see you this morning here. Are you surprised how fast this market rally has come on after that big sell-off last week?
No, I mean, this is a policy-fueled rally, and obviously the Fed's action to increase its support of its backstop relative to corporate bonds in the secondary market was another sort of boost to what has been a liquidity and policy-fueled rally.
If it is a policy-fueled rally, how fragile is it? And what might be the catalyst to bring us to the downside in the coming weeks in your mind?
Well, so the other aspect that leads to its fragility is, and there's been much discussion about this, is the fact that it is primarily retail-led. And if you look at institutional positions, they're typically short, whereas if you look at retail measures, much has been discussed about Robinhood. But if you look at other measures such as DARTs and E-Trade, Ameritrade, all suggest, a fairly robust retail rally. And so, we think that the policy impotence justifies the rally. It's what makes it vulnerable is its concentration, and it's about to get more concentrated as the Russell indices reconstitute, but that the top 5 stocks take up more than 20% of the S&P's market cap. And so that the breadth of the rally give us some pause. And then, of course, obviously, the virus is still lurking out there. So if you have what's being priced in is a V-shaped recovery. If we suddenly transition to a W where there is a significant second spike, I don't think that the level of policy infusion is sufficient to bail us out of that.
Tina, you mentioned the institutional money still very much on the sidelines. Why are they on the sidelines right now, and what would trigger them to get in more aggressively into stocks?
Well, what's keeping them on the sidelines are the poor fundamentals. I mean, if you look at, for example, the bond market, something like 50%. Well, first of all, corporate bond issues has topped something like $1 trillion, which is almost what it was in all of 2019. And you have a situation in which the triple B names are about 50% of the investment grade issuance and more than the entire high yield market. So if those fundamentals, the weak fundamentals continue, and you have significant downgrades or more fallen angels, that would overwhelm the high yield market. And that would be one potential crack in the armor of basically fundamentals catching up with prices. And I think that, institutional investors that are trained to look at fundamentals like that, are cautious.
Speaking of cautious, Tina, how much of a wild card is the upcoming presidential election, do you think, for this market and for you and your clients in particular? What are you seeing?
Well, so a Biden, there's at least certainty now on the D side, right? But the sort of wild card with respect to Biden is the vice presidential pick. Whatever your politics, if it were someone like an Elizabeth Warren, that would be market relevant probably for healthcare and particularly HMOs. And certainly, the shining stars of the current market in, the Facebooks of the world, they are already under, some threat with respect to laws in Europe and California around pricing privacy. But suddenly, some of the crown jewels, such as Facebook's WhatsApp or Google's Google Ad, may look a little tempting to do some antitrust action with a Warren type, or someone with that sort of more left of center bent. And so, will Biden as a whole, even if he doesn't choose someone like that, be as friendly to the stock market as Trump is, and who is totally focused on sort of pumping up policy that pumps up the stock market? But I think the bigger threat is sort of a less market friendly vice presidential pick.
Mm-hmm. Tina, I have 15 seconds left. Just to what you were saying, I think is very interesting on the vice presidential pick front. So if Vice President Biden does pick Elizabeth Warren, is that instantly bad for the markets?
I think you will definitely see tech and healthcare stocks threatened.
All right, let's leave it there. Tina Byles Williams, CEO of Xponance. Good to see you. Have a good weekend.
You too.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.